And we're going to go ahead and view. We're going to admit everybody. Alrighty, so it looks like we have everybody joining now. I want to thank everybody for coming on board for the Laveniir Virtual Workshop number 2. My name is James Nemeth. I will be the ceremony host while we have our esteemed panel and guests as we're going to be going through. So without further ado, I am going to go ahead and get everything set up so that we can go ahead and start. And here we go. Good afternoon, everybody.
Good afternoon.
All righty.
Good afternoon.
Hello.
All righty. Good to hear and good to see smiles on everybody's face. All righty. Here we go. And I've got the video panel all put up. So, after the success of the first Laveniir Virtual Tax Workshop, it really did make sense, especially as we're getting closer. And I think, just this past Friday, the IRS was now accepting refunds or for submissions for filing taxes. So it really made sense for us to go ahead and kick off workshop number 2. And the biggest thing about workshop number 2 was kind of talking more in depth about refunds and exactly what that was going to entail. So we're going to go ahead and without further ado, we're just going to go ahead and kick it off. Alrighty, here we go. So let me go ahead and introduce Miss Ursula Martin, and as she introduces Laveniir.
Thank you, James. Good evening, everyone, and thank you for joining the Laveniir Tax webinar. Thank you to all the attendees who made out of time out of the busy schedule to attend. I can guarantee you that you will benefit from it. I am the senior tax consultant at Laveniir, which is a tax preparation and business service agency. For the little background about me, I am a JD holder with a master's degree in corporate law, which actually touches every aspect of a business or corporation. And one of the most biggest important component of a corporation, of a business, is the tax aspect. We have decided to host a series of virtual webinar. After the first one, like James rightfully said, it was time to provide you with the second webinar, which is titled The Secret Behind Your Tax Refund. I will urge you to watch out for the third one coming up soon on my tax decisions. However, let's focus on today's webinar, The Secret Behind Your Tax Refund. 3 reasons why we are offering today's webinar is, first of all, because we understand the importance of your tax return document and how it impacts you in almost everything that you do. The second reason is that Laveniir is committed in educating the taxpayer on taxes so that they can make informed decision on what they would like to do or how to plan ahead. The third reason, finally, is that Laveniir believes that empowering the taxpayer provide control in the hand and help them receive the best outcome, the best refund.
Awesome. Already.
Right into it. Okay, James.
Yep.
So my topic is going to be on understanding your tax refund, the concept of your tax refund. We have 3 topics coming up. The first one, again, is understanding your tax refund. First of all, to get the most out of anything, you are required to get to understand and know exactly what that things entail and the best way for you to master it. So the first thing I will bring to the attention of the taxpayer is that it is a law. Tax is a law that we all have to comply to. We have to comply to paying taxes on any income that we earn. That's just the law. And there is a great benefit in complying to that law, is great benefit to abide by that law. And as we will go in depth in the topic, you will understand why. The secret behind your tax refund lies in complying to the tax law, which is to pay taxes.
Alrighty,
Let's
so
get to the little drawing that we have on the screen
oh, sorry.
on the right hand side. Right there, you can see we have the word refund that is divided into two. Sometimes we actually come across word and then tax, some word, and then we just spell them, we just read them. But it is important to take a minute to focus on what is on the screen right there. You will see that the word refund is actually composed of two words. Re on one hand and the fund on the second hand. The re stands for repetition. And we all know that for a repetition to take place is only an action, a prior action that is repeated the second time at least. So keep in mind that for repetition to happen in this case, the prior action or initial action here is very critical. And that prior action or initial action is simply the payment of taxes. You will see how it all play out when we go further. And with the two other speakers that will speak on the two different aspects that are important to tie together. For you to have a room in order to gain a refund, you have to actually work for it in a way. You have to have a room, you have to prepare a room for it, for the IRS to actually draw from that room, from that space for you to have a refund. The guarantee that you have is to comply to the tax law by paying taxes. Any other credit that can actually lead to a refund is not totally guaranteed. The only thing that is guaranteed is that if you pay taxes prior, you stand the chance to get a refund. All you need to do is to follow the guideline and the tips that we're about to provide you in this webinar. Just think about it for a minute. Very important to focus on the word refund and think about what are the guidelines? What do I need for the action of getting a refund be materialized?
So you're saying that death, so the only two guarantees in life are death and taxes are actually a true statement?
Yes.
That is absolutely, that's one of those things where, totally makes sense. And, kind of giving out this definition of tax really does help because it kind of breaks down the myth and the mythology of taxes and stuff like that. And so this kind of gives it that people shouldn't look at taxes as being a bad thing. It just simply looks as an opportunity for something else to happen, I think is probably the best way. And so to kind of segue in, we're going to go ahead and introduce our two other guest speakers, which is Dr. Ed Whittle and Andre Aris. And so essentially they're also from the first workshop. You also kind of remember their book, Turning Debt into Dollars, turn everyday expenses into monthly income. This is a really big component. Dr. Ed is founder and CEO of Peak Land Investors. And also with Andre, they've created the True Freedom University that focuses on financial literacy, personal and business finance, and real estate investing. Good afternoon, gentlemen. How are you guys doing today? Doing good so far?
I'm wonderful.
Good afternoon. I'm doing great.
Awesome. So what we're going to do is, Dr. Ed, we're going to go ahead and kick this off. And
Okay.
so without further ado, let's go ahead and start with you and kind of tell me and give me some of the information about claiming your business while getting a refund and how that whole process works.
Yeah, one of the best kept secrets in the tax world is that if you have a home-based business or a small business, it gives you an ability to shift some of your everyday expenses into tax deductions, as long as you can justify those as legitimate business expenses. One of the gentlemen that I've learned a lot from is a guy by the name of Dr. Ronald R. Mueller. He's a MBA and a PhD. And he wrote a book many years ago called it's not how much you make, it's how much you keep. And that was a very interesting book. And I would recommend, anyone who has an interest in what I'm talking about to go and look at that book, as well as, checking out our book that Andre Harris and myself wrote. He's got an updated book, Dr. Ronald Mueller, that I'm going to use a little reference to here in a minute. It's called Business Tax Deductions, Windfall Tax Savings Approved for Small Business Owners. And I think, James, you have a screen.
I do. And actually, we do. We've taken it and kind of taken the chart that kind of shows what a legal business deductions look like, cross-references it against what actually a legal home business deduction. And one of the things that you'll see is that everything that a normal business would be able to make those deductions, is that correct, Dr. Ed? You could also actually make those same assertions from a legal home business also too, correct?
Absolutely. And I want you to really notice some of the expenses on here as being expenses that you are probably paying in your personal situation, security alarms, cell phones, desks, sofas, coffee tables, paper, pens, ink cartridges, postage, computers, gas, electric, just to mention a few as you go down this list. The whole point being is having a small business or a home-based business. One of the most important things is to learn how to leverage some of these expenses into business expenses, into home business deductions, so that you can maximize your tax refund at tax time.
So great. So, and let's go ahead and present this scenario that I think, when you initially showed it to me was really, and hey, I'm a James and there's a Jim. So I really took this to heart, but let's look at the scenario of how we can maximize that tax refund.
Absolutely. Yeah. Let's see, use an example. A man named Jim buying an investment home for $25,000. Now, some people would say, no way you can buy a house for $25,000. Yes way. I will say yes way. We've done it many, many times and continue to do it. It's not always the greatest house in the world in terms of might need some repair, might need some fixing up, but let's just use that example of $25,000. And then Jim rents it out for $400 a month. So you see the correlation. Rent is very low. The cost of the investment house is very low. His mortgage cost him $2,500 in mortgage interest per year, right? So that only equates out to about $200, a little over $200 a month. He pays $1,000. Jim pays $1,000 in real estate taxes, $500 in supplies, $1,000 in legal expenses, and $3,000 in repairs. And those numbers are going to vary year to year, but let's just use that as a particular year where those numbers are come in, and they're not always going to be all those zeros. It might be $503 in supplies, $944 in real estate taxes. But just for the example, let's use these round numbers. He travels to the out-of-state home every 3 months, right? And his travel expenses are $1,000 every 3 months. So for a year, that's $4,000, right? 4 quarters of the year. Management fees come to $500. So if you break that down, his annual income is $4,800, but his annual
Expenses.
I'm having a hard time seeing the screen.
Sorry, annual expenses of 12,500.
Yeah, you help me with that part of the screen. Okay, so annual expenses of 12,500. That leaves a tax deduction of how much?
6,700.
Okay, so he pays 0 taxes on the $4,800. That's the first thing I want you to understand. He made $400 a month in rent, right? And paid no income taxes on that $4,800, because on the Schedule E form that he used in accompanying his 1040, he also had expenses for having that rental, that investment home. Okay, so his tax deduction is a product of $4,800 of income, $12,500 in expenses, leaving 67. Tell me that number again.
6,700.
Okay. So this maximizes his tax refund from its original amount. Let's say he paid $2,000, he was going to get a refund of $2,000. But if he's in the 20% tax bracket, he will, as a result of seeing the $6,700, he will receive an additional $1,540. Actually, the number should have been $7,700. I think that's what threw me off a little bit.
No, and so my apology on the math there.
No problem. Yeah, there's a typo. I was looking at my notes. I'm like, how does that say 67? Mine says 77.
I was just trying to simply bump it up a little bit.
That's
You know how that
okay.
goes.
I'm one of those guys. You send me down a rabbit hole, I will go down there. I will go down there and see what's going on. Anyway, 20% tax bracket on 7,700. That's $1,540. So as a result of having this investment home, he would have been able to add another $1,540 to his $2,000 tax refund, and the real estate would maximize his tax refund at $3,540.
So the benefit of the Schedule C and E. So if we were to kind of kick into the next piece where the Schedule C form, exactly what is the Schedule C form actually going to do?
Yeah, that's a great question, James, because there's actually 2 ways to be a real estate investor. And actually there's a lot of different types of home-based businesses. You know, if I was going to give you 3 quick examples, you know, one quick example is we know a guy who runs a coffee business. All he does is market his website, right? So he's actually his coffee business is, he's simply a marketing representative. He markets for people to go to his website, buy coffee on his website through a particular company that sells coffee. And once he markets and they get some volume, the company then sends him a check for a percentage of the volume. That's one way to have a small business, right? And but let's use real estate so you can see two different ways that you can do real estate. There's real estate investors that I would call somewhat passive in their nature, in that they work with another, and they work with an active investor. They accumulate a home, and the way we just showed you a particular Jim's example, they would not necessarily use a Schedule C, because they wouldn't be real actively running that real estate. They would be passively running it, in that someone rents the real estate and they do passive work to the real estate that would only show up on the Schedule E. Now you see the Schedule E in front of you. That Schedule E would not relate so much to running a business from a Schedule C perspective. It would be strictly related to that real estate. You can have 1 house, 2 houses, 3 houses, 5 houses, as many houses as you would have. You could get write-offs think up to a maximum of $25,000 cumulative. The Schedule C and the Schedule E running together is more a real estate business that the real estate investor would buy the real estate personally.
Oh, I think we got a froze at that moment.
Using a corporation status by like using a Schedule C and an E. So there was, without getting real complicated, there would be more involvement that would create expenses and income that would go on Schedule C, profit or loss from business, as well as the Schedule E, a supplemental income and loss from having the real estate. Now, one last thing. The Schedule E is very particular to real estate, right? The guy that has a coffee business or, sells cars or, does something other than real estate and does not use a Schedule E form, but does use a Schedule C in most cases.
Well, that is great information, especially to kind of give us some insight. So, Dr. Ed, I definitely want to thank you for your time to kind of bring that into perspective of simply just, what a real estate investment looks like and how, if you were just simply looking at just purchasing a secondary property and how exactly you would leverage that Schedule C versus the Schedule E. And the biggest thing about it is for everybody that's on the workshop is, this isn't stuff that you have to try to remember. This is the reason why you pay a tax professional like Ursula that would help navigate those waters to make sure that you have the right forms that are being used. Because if you use the wrong form, you're opening up yourself to a liability and also an audit too, correct? And so that's a really big to do. So we're going to go ahead and transition over to Andres. And Andres, real quick, can you tell me how tax withheld payment from a W-4 plays a role into getting a refund?
Absolutely. Can you hear me?
Yep.
Okay, great. The W-4 is for people who are employed. So this does not relate to people who are entrepreneurs, unless you're an entrepreneur and have a job. When you are working for a company, they have two different forms that they can give you to indicate your income. One form is called the W-2, and the W-2 and the W-4, they work hand in hand. The W-4, you fill out at the interview of your job. Once they hire you, you fill out the W-4, and at the end of the year, they give you a W-2. If you don't fill out a W-4, then you're going to receive another form called a 1099 MISC, which was changed this year to 1099 NEC, Nancy Echo Charlie. So the Nancy Echo, the 1099 NEC, or the 1099 MISC is the exact same form, just for knowledge sake. So with the W-4, before Trump came into office, it was broken down in what is called allowances. And the whole idea was for you to claim how many allowances on your W-4 that you have in your family. And so people began to consider the W-4 based on the number of people in the household. So if I was married with 2 children, I would say 4. And so 4 would go onto my W-4 to say I have 4 allowances. So the new W-4 is no different than that. It is based on the children and your family. However, it is based on what you are claiming. Now, the word claiming is the big deal here, because it's not based on actuality. You can take what is called projections on your W-4. What does that mean? So let's say that I am single and I have no children. So when I fill out my W-4, basically I have 1 individual. So they're gonna take out more taxes out of my paycheck because I'm only claiming myself as single. If you look at box C at the top, that's where it is. That's the whole matter of the W-4. So now, based on these three categories, these are options, and you have to understand that that's the way it is, because a lot of companies don't understand that. They will actually fill out your W-4 for you because you told them that you are married with children, so they'll fill it out for you. But you can claim one of these three categories on your own. It's a projection. So I will tell you that if you are single, but if you claim, and again, I'm gonna use the word claim, if you claim that you are married, filing joint, they will actually take out less taxes. Or if you claim head of household, they will actually take out less taxes. This form is what we use years for the last, I don't know, 15, 20 years for our clients to show them how to put extra money back into their paychecks and use that extra money to go into business. That is the reason why you can claim single, you could be single and claim married filing joint. But if you don't have a business, if you don't have a side opportunity going on, and you are single and you claim married filing joint, the opposite is now going to happen. And what's going to happen is you're going to actually owe more money back to the IRS because they took out less taxes. So I don't want anybody to be confused. So all I'm saying to you is the purpose of the W-4 is to simply determine how much money are they going to take out in taxes. But you need a professional person like Laveniir to sit down and explain to you what is the best way to go about using the W-4 if and only if you're looking to get into a side business or have a side business. If you do not have a side business, you should not change your W-4. You should make it as accurate as possible, because this is where you gain or lose money with the IRS, and you can get in a lot of trouble with, you won't get any trouble with the IRS as far as claiming on the W-4. You get in trouble with the money side because you're gonna owe more money. So that means at the end of the year, instead of getting a refund, you may end up owing the IRS because this W-4 form was not claimed with a business, and using that example as being single. So please, if you're single, claim single. But if you're single with a business, then yes, get with someone like Laveniir, talk with them, explain to them your situation, what your W-4 looks like, and then they can properly advise you whether you can claim married filing joint or head of household. One last thing, if you have a second job, whatever that second job that you have, it is reflective of the first job. Now, I don't know how they determine which job is first and which job is second, but whichever one is second, that one you definitely need to claim as is. Meaning if you're single, claim single. If you're married, filing joint, claim married, filing joint. If you're head of household, claim head of household. Here's the reason why. In my experience over these last 20-something years of doing taxes, people who have tried to get money or not claim their two jobs properly, they were financially strapped every year with paying that money back to the IRS. So wisdom says, do not do that on your second job. In fact, pay as much taxes as you can. I would also say that if you talk to Laveniir, it's a possibility that you can actually, if you're married filing joint and you have that second job, that you can actually file single Why is that? Because that second job now is going to actually pay out more taxes out of your paycheck. And at the end of the year, you're more likely to get a better tax return and you actually pay more in taxes. So that would be my recommendation. But ultimately, talk to companies like Laveniir. I highly recommend you talk with Usely about this. She can definitely guide you through the process. It's not a simple, I mean, it's a very simple process, but it's a very complicated system that they put here because people get very confused, especially at jobs. I talked to several companies about straightening out my clients' W-4 because they automatically changed them, and that changed our strategy. So I had to show them how to go back and change it to back the way it was before. So that's pretty much what I had to say about the W-4.
That's actually, you brought up a lot of good points. And the other thing that I also saw, and this is something that we're dealing with, especially with 2020, is the fact that we may have some of our guests that have been laid off. And let's say they're starting a new job. And let's say it's actually a job that could potentially elevate them into a new tax bracket. And this is where you really want to make sure you're connecting with, Ursula at Laveniir, because you want to make sure that you have the right amount of money that's being taken out or not being.
Correct.
And that's where also that, if I'm not mistaken, that's where in step 4, you could actually do extra withholding, but I would only probably suggest that's being done on guidance from Ursula at Laveniir to ensure that everything is being covered. Because if you are jumping into a tax bracket, that's pretty much, that could be catastrophic. Because if you're expecting, let's say, a refund at the end of the year and you're jumping a tax bracket, that may end up potentially, jeopardizing that refund too, correct?
Okay, so just for
Ursula,
clarity,
you're on mute.
Hello?
Oh, I saw Ursula was on mute.
Yes, I was
Okay.
on mute and then trying to say something. If you could allow me, Andre. On that note, I want to say to the attendees and the taxpayer watching that we have on Laveniir website service under tax services marked as prepare to file my tax later, which provides you with a free tax saving analysis. This is a free service that you can actually tune in by end of April of every year to prepare you ahead of time for the next tax season, which is next year. And that service actually allow us to review everything. If any change about what you want to do next year, what is your decision, what is your planning, and that way we can actually provide you with everything that you need as a guideline to actually achieve that target or that goal by next year. So if you want that service, check us out by the end of April of every year. It is a free service.
Absolutely awesome. And then Andre, what were you gonna add?
Actually, I was gonna say that you need a company like Laveniir that's going to give you, a breakdown of the benefits of the W-4. So she actually said it much better than I. I didn't know she had a free service. That's awesome. That's very awesome, because most people, they spend all this time and money fixing their cars and fixing their hair and their nails, but they don't do anything to fix their taxes. And they think that just by going to a tax preparer that it is what it is. And it's not it is what it is when it comes down to taxes, especially if you have a side business. So companies working with Usely, you're going to have a great person to give you the necessary information that you need to properly set yourself up, because nobody wants to have a situation with the IRS. They just want you to just get the paperwork done and that's it. Sort of like you take your car in, you got a flat tire, you want the car to come back with a tire with air in it. It's just that simple. It may be that simple, but it's kind of complicated to get that done oftentimes. And so just like you said, James, just leave it to the professionals, leave it to Laveniir, because they've been doing this for quite some time. They know what they're doing, and that's why we're supporting them.
Absolutely. That's great. So let's go ahead and now do a real quick commercial and talk about, for everybody, especially, what is your 2021 resolution? That was our commercial that we wanted to do. I don't think I've ever seen as much money in one little area as I have before. It's kind of really refreshing to see, for sure. But it's just one of those things where you really want your 2021 resolution to be focusing on the future, and that is all through preparation. And the more you can prepare now, and the more that you can take advantage now, the better your situation is going to be in 2021. And that's exactly the reason why we dropped that commercial right there. All right, so let's go ahead and get into case studies with Ursula. Andre, probably want to have you chime in a little bit here too. But Ursula, let's go ahead and kick it off, shall we?
Yes.
So, case study number 1. How can a company get away with creating advertisements like this? I saw this on social media. Obviously, we're going to go ahead and admit all the pertinent information because we certainly don't want to get anybody mad at us. But how is there, why is there so much of a dollar difference from 1 child to 3 child? I didn't realize you can get a school credit up to 1,000. And if that's the case, I'm going to see if I can claim my cats, because seeing how much money here, I am definitely all about this. So can you kind of unwind this and just kind of let me know what's going on here?
With all pleasure. So it's important here that we actually live through what we said Laveniir is, which is about educating and also providing winning strategies. It's important that the taxpayer is not misled in any way. It's true that what is here is a lot. It's talking about the credits that you can get when you have 1 child or 2 children or 3 or 4, and then so on. So it's all about the dependent. If you have dependent, you may be eligible for credit, but not as much as is put here. I have to say that very clearly. I have to be very careful by saying that I'm not up to what is here. There is no way any of us can guarantee that someone can walk away with so much, even though it said 1 child up to. All I know is when you have 1 child, the IRS will provide you with an earned income credit, which is up to $3,500 for 1 child. And for 2, you can actually get up to $6,000. Really, with my 10 years experience in taxes, most likely when you actually have 3 children and then you actually pass the cap of 3 children, really the 4th one is really for you to play on your exemption. Really, there is no any additional credit that you can get really. The 3 children, however, is going to be another $1,000 that will go on top of it, really. So here we're talking about the earned income credit, which is a refundable credit, is a monetary credit. There is a difference between a credit and a refund. There are credits that can be translated, converted into a refund, and it will add up to the refund that you have. But mind you, without an income, a qualified income, you will not get it. So we're talking about here the earned income credit, we're talking about the child tax credit, and then we're talking about a school credit that has nothing to do with having a dependent or not. It has absolutely nothing to do with it. It has to do with taking some classes, but for what reason? And also if it's college, is degree orientated, if it's only a certificate, a program, you may not be able to be eligible for that credit. And even if you are taking some classes or getting education that lead to a degree or a way to better your life, your financial life, you may still not be eligible because of the type of income that you will have, or the amount of income, or the taxable income. So there is a lot of if, and it's important that the taxpayer is not misled and think about, okay, maybe I should just start having children and having like 3, 4, just for the purpose of getting credit, or what it said here. So that's what I have to say here. I know that my colleague will also tune in to bring his contribution.
Absolutely. Can you hear me?
Mm-hmm.
Yes.
Okay, great. So my thing is this. This is definitely advertising. This is not about reality. I just saw a couple signs myself. One said child tax, your first child from 3,000 to 7,000, 2 children from 7,000 to 10,000. These types of advertising, as far as I'm concerned, and I've been in the tax business for 20 plus years, I know usually she doesn't do this type of false advertising. And it's not really false, it's just overstretched. And it's just to get your attention. If you put out a sign that said child tax credit, $3,600, and somebody saw another sign that says child tax credit first child up to 5,472, then they're going to most likely go to the one with the bigger number.
Absolutely.
But my thing is this: if you're not going to work with someone that's honest when it comes down to money, if you want to work with someone who's going to make you excited, then by all means do so. But companies with like usually Laveniir and our company, we don't falsely give you the wrong idea about your tax situation. In fact, what makes us more powerful is that we educate our clients. Companies like H&R Block and Hewlett Jackson, they are number companies. You have a digitized number, and they're gonna treat your account just like a number. It's sort of like a factory per se. And so they will factory your tax return in, and they will factory it out, and all they want to do is get paid, and that's it. But I promise you, in many cases with these companies, they're not giving you the best return. So how do you know if you're getting the best return if you're not being educated about it? So that's what happens. And matter of fact, just to throw this out, most of my clients that I get every year, because I do no advertising, comes from people who've been to H&R Block and to Hewlett Jackson and have felt that manufactured tax return. And so they wanted something better, and they wanted a company that was a little more concerned about the client than concerned about just getting a tax return done. So companies like Laveniir and Usually, the honesty is up front. That's why you have these webinars for realities and honesties, because a lot of people are not getting the best benefits in taxes, even though they think so, but they can't necessarily prove it. I'm gonna just say this one thing in closing. I had a client who was upset with me because when I did his taxes, it was different than the person from the year before. So the year before, he had a $2,000 refund, and I showed him, I said, okay, on your tax return, this person indicated that you spent $20,000 on office supplies. Did you have $25,000 in office supplies? He said no. And I said, well, let's just hope that the IRS does not come after you and question you about that, because they're not going to question the tax preparer. They're going to question whose name is on the tax return. So if you don't understand what's going on with your tax return, then that's where a lot of issues come up, and that's where a lot of people come and see us to fix a lot of these problems that these other tax companies are advertising and not being completely honest. That's what I wanted to say about that.
Yeah, and these are all great pieces, because the first thing, especially for all of our people that are on the Zoom today, is if you're seeing dollar signs, you're really not having a conversation. It's all about that conversation. It's about understanding your scenario, understanding your situation. Don't make it about the
Right.
dollar sign first, make it about the conversation. So let's go ahead and move on to case study number 2. So if I submit an energy credit, will this enable me to better my chances of receiving a tax refund?
Okay. An energy credit is a non-refundable credit. It's not a monetary credit. So it has nothing to do with better your chance of receiving a bigger tax refund. However, there is a way to transform that credit into impacting your refund. First of all, the first thing to have in mind for an energy credit is the ability to use it for any tax liability you may have. So when you have a tax liability, it will lower it or wipe it, and then you can walk away free, still have a refund if you have an opportunity, if you have a room for refund, still get your refund, and you will not use your refund to pay for any liability. That's number one for an energy credit. However, there has been new tax law on energy credit that has changed everything. Now is strictly reserved for some taxpayer in the military and other fields specifically for you to use that. And also they have added some layers that actually make it more difficult, almost insignificant, to claim it and get the best out of it like we used to in the past. That's for the energy credit. So again, that is bringing focus on what we said earlier about your secret behind your tax refund lies in complying in tax law, which is paying taxes. Very simply put it that way. So that's what I have to say about the energy credit. It does not really enable you to get a better chance to boost your tax refund or anything like that. You cannot rely on that. The only guarantee that one can have is pay taxes, not overpay, but pay taxes.
Got it. Makes perfect sense. Alrighty, so let's go ahead and move on to case study number 3. I only got unemployment compensation last year and I have 2 dependents. What will most likely be the outcome of my tax return?
Okay. Unemployment compensation is exactly as it is, unemployment. It means that I haven't worked. It means that I haven't earned the compensation, right? That type of income is, that type of compensation does not qualify you for the EIC. It doesn't qualify you to get any earned income credit for the dependent and so on. It's very important that the taxpayer is educated on that and not be fooled, because last year, because of the pandemic, a lot of taxpayer got unemployment compensation, and they expect that everything will be as it is with an earned income credit with the dependent. Unfortunately, it doesn't work like that. Unemployment, as well as the lack of social security compensation, and that's not limited to those two, are not income that will provide you with a certain credit. However, you can actually get unemployment and get also partial earned income credit, and it will make up for it. And plus, if you have a business which qualifies you for the earned income credit, it's all up to your tax professional to know how to use the number together for you to be in between exactly where you need to be in order to get all the credit that you are entitled to. But it's important not to confuse credit and a refund. The guarantee of a refund technically only lies in paying taxes.
Got it. That's a really good explanation. Andre, was there anything you wanted to add into that, or is good?
Yeah. Yeah, yeah, usually it's exactly correct. And I was going to say that for those people, if you know anyone who has been receiving unemployment compensation, especially because of the COVID, I highly recommend that they talk to usually or whoever they're going to talk to about their taxes about next year, because the wisest thing to do is to start a side business immediately so that you can get this earned income credit for your dependents. Usually earned income credit is mostly what a lot of people only receive as far as a tax refund to help them out in that area. Same thing with reducing the amount of taxes that's owed. If you owe taxes, you won't get the earned income credit um, until you have something like a side business. So we are proponents of side business because that is the best tax return. A tax return without a side business is a sad tax return. Let me put it to you that way.
And then, yes, on that note, I have helped several taxpayers. One of the latest example is that I had a taxpayer always finding themselves very short with, the tax payment. And what I actually have to advise on top of paying taxes, I said is kind of like my diagnostic, like from a doctor. I actually recommend that they start driving Uber as a side business if you don't have any other idea for businesses. What about you drive Uber? You don't have to drive it full time. You can make it part time. And believe it or not, it has made a huge difference on his tax return this year. And very legally before the IRS, he was able to walk away to breathe the way he has never done before. So it's important that you follow our guideline. It's not just about, okay, I'm going to start a business and just leave it to the tax preparer or professional to figure out. There is a part from you to do. You have to either attend those kind of webinar or like find out things or respect the strategy that we lay down for you. So that's what I have to say about, we know why we actually stretching, one way, paying taxes and also have a side business. And also the IRS itself is providing advantages for people who works for someone, pay taxes, and at the same time have a side business. There is a reason why. The reason why is they want to encourage taxpayer to have a business, because businesses, small businesses, are really the driver of any economy. And as well as if a nation or government encourage a taxpayer to actually venture into business and things like that, is just a way to boost the economy.
Yeah,
So it's exactly for us
makes
to
great
actually
sense.
that and tell you it's for your own good.
Well, that brings us to our final segment as we're getting close to wrapping up. And so with that, we're going to go ahead and throw in some questions. And I believe we have one question that was on the panel that says, with the additional money coming in stimulus this year, along with receiving my refund, what suggestions would you advise me to do this year to maximize my refund for next year? If I'm not mistaken, based off of everything I've heard, setting up a side business is probably the biggest way that this can happen, correct?
Yes, yes, absolutely. I mean, we are all a number one supporter of having a side business, a home-based business, however you wish to call it. Yes, that's what I will actually advise. And we also have a program in place to encourage taxpayer to venture in business, which is the free QuickBook subscription every year, because it's important in the line of what Andre said. Is all about doing it the right way, legally, right? People just think that we make up numbers. It's not possible. We want to actually help you by providing the right thing, the right support. And that's why we're giving away for all our clients that are business owner to have the free QuickBooks subscription. Every year is free actually, and it allows you to track your mileage. It allows you to actually separate your personal expenses and business expenses, and it helps you organize and provide every support that the IRS may request, and that gives you the peace of mind.
Absolutely. And I think that's the biggest thing. So let's go ahead and let's open it up to our esteemed guests that have stayed on with us through here. Is there anybody that has any specific questions that we can help answer today? All right. Well, the great thing about it is you can always go to laveniir.com and you can go ahead and check out the tool that Miss Ursula was talking about. I would also suggest that if you have any additional questions, please don't hesitate to contact us feature. And so we want to thank everybody that has attended the workshop number 2. I would definitely say stay tuned. We will be posting information about workshop number 3. Miss Ursula, when do you think we're going to do workshop number 3?
Sometimes in March is titled Your Tax Decision. Everything here is to give you control in your hand and to make informed decision. So the next one is your tax decision. You need to start thinking about what is your tax decision, how you want to maneuver through the tax system.
Absolutely. And I think that's great. And then Andre, any closing thoughts?
Yes, it would be my suggestion that if you really are considering and you don't have a side business, to look into real estate. Real estate has so many different components to it that you can use for tax deductions. Now, I will say this, the number one reason why people fail in business is because they don't have a plan. It's just that simple. If you don't have a plan, you're going to fail. I'm not trying to sugarcoat it. I'm just telling you, I have worked with people for years and years and years, and they come to me to do their taxes, and they just have an idea, and they're trying to work their idea, and they want their tax return to reflect the idea that they have. And guess what happens? Next year, they don't have that business anymore because they didn't have a plan. So for a long-term consistency in business, you have to have a plan. That's what allows the tax preparer to give you the strategies necessary so that you can start moving forward in business. If you don't have a plan, then what I'm trying to say is part of that plan is your tax preparer. If your tax preparer is not part of your plan, I'm sorry, you're going to have a lot of problems. And that's from my experience of 25 years. And there's just so many different things that happen because of a lack of a plan. So please, 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 before you go or while you go to your tax preparer, go with a plan. That way you can secure your success.
And to close, that's very important. Do you know that anything your tax professional is charging you, what you pay your tax professional is deductible? If you have a business, you're going to deduct it from your business. So that's part of your expenses. It's not that you paid it out of pocket, really. It may look like you're paying it out of your pocket. It may come out of your tax refund, but at the end of the day, you're not paying for it because you deduct that from your expenses if you have a home-based business. So that's sugar on top of what we are talking about. We don't want you to miss out.
That's great. Well, we have just come to the top of the hour. I want to definitely thank everybody for participating today. This was definitely encouraging and rewarding all the way through. Once again, don't forget to go visit us at laveniir.com. We look forward to being able to help assist. We want to wish everybody having a great and safe rest of the night. And as always, if you need anything, don't hesitate to reach out to us. Thanks, everybody.
Thanks.
You're welcome.
Bye.